Current polling shows 83% of Americans describe the current state of the economy as poor.
And if you think about what is going on right now, the economy is clearly slowing down.
You have very, very low consumer sentiment. And so I think that these are going to be challenging for the next 6 to 12 months.
Cryptocurrencies are going through a spectacular crash, and even the head of one of the largest crypto exchanges said the Federal Reserve is responsible for this downturn. I mean, the Federal Reserve announced the largest interest hike in nearly 3 decades. They raised rates by 0.75%, trying to cool off an overheating economy and bring down record high inflation. But if they keep raising rates, what will happen to the dollar and the market? And how will it affect the global economy? Worry not, in today's video, I'm going to cover Lyn Alden's viewpoints on this economic downturn. So stay tuned to the last, and if you're new to my channel, be sure to subscribe for more videos like this. Let's hear her out.
So some of the stronger emerging markets have front-run the Fed. And so they started raising rates, well over a year ago. Many of them have positive real rates, actually, way higher than the Fed. And some of them have a lot of reserves relative to how much, say, external liabilities they have. And so I think those would weather it pretty well. I mean, they would have to tighten. That can put themselves into a recession, but I think they can get through that. I think the problem areas are ones where their external liabilities exceed their reserves. An example would be Turkey. And ones that are not raising rates to basically attract foreign capital, above their level of interest, above their level of inflation. And so it makes their currency undesirable. Again, Turkey is an example of this, but there are others. And so I do think this is a dangerous environment for a number of those weaker emerging markets that don't have the reserves or the positive real rates to, basically become a carry trade. And then as for the dollar itself, I mean, you're comparing it to Europe and Japan and these other major currencies. I think that the dollar is going to strengthen, or at least be neutral relative to them, especially if they continue this hiking cycle. But that it's not necessarily going to strengthen compared to the strongest currencies out there, the ones with the huge current account surpluses, the ones with positive real rates, or at least less negative real rates. So I think it's something you have to look at on a currency by currency basis. But certainly one of the biggest factors in global macro is the dollar. It's very hard for the world and even the U.S. to grow while the dollar is strengthening, because basically what it's doing is it's kind of like quantitative tightening the whole world. The unit of account that the majority of the world uses for its external debt liabilities is strengthening relative to a lot of other currencies. And so you get this kind of like tightening dynamic.
According to Lyn Alden, the global impact varies country to country, as it all depends on currency by currency basis. Some of the emerging markets will do well after tightening and putting themselves in recession. But what about other markets? How will they react to it? This does create a dangerous environment for weaker emerging markets. Lyn strongly believes that the dollar is one of the biggest factors in the global macroeconomy. Do you agree with her? Let me know your thoughts on this in the comments below. No matter whether the market is a weak or strong emerging market, dollar strengthening surely impacts the growth of the world and even the US. Now, what else happens in strong dollar environments? Let's hear her out. But before diving ahead, give a big thumbs up if you find this video informative.
And that also means generally that, in strong dollar environments, the foreign sector doesn't buy that many treasuries. And that actually ends up in large part being the trigger that causes the Fed to eventually reverse, because if the foreign sector is not buying a lot of those treasuries, it means domestic sources have to buy more of them, which means they're not buying as many stocks. And so basically you get a crowding out effect. And eventually what happens is the Fed has to come in and be dovish in some way. Now they could, for example, buy treasuries themselves. They could also do things like adjust the SLR rules for banks to allow banks to buy more. And I think that's one of those things. It's not on the cards for the next couple months because there's not a lot of expected treasury issuance at the current moment. But I think the longer this extends, the more treasury market illiquidity and lack of demand could be a problem for them.
There's a big impact on the treasuries. Foreign sectors limit their purchasing of treasuries. Lyn points out that in such a case where foreign sectors are not buying, what happens is that domestic sources start buying more and more. And even the Fed has to enter it and buy treasuries themselves. Or what they do is they could adjust the SLR rules for banks so that banks can buy more treasuries. She even tweeted regarding this recently. Other than the Fed, U.S. commercial banks have been the biggest Treasury buyers since 2020. So can we say that the Fed's actions right now are the biggest drivers of where the markets are heading all around the world? Let's hear what Lyn believes.
I think the Fed is certainly one of the biggest drivers. I think obviously what's happening with energy capex and geopolitical issues, Russia's war, I think those are also very large factors, but certainly the Fed is one of the biggest because they have a large control of the main unit of account that is used not just in the US, but globally. And so that's going to be a big factor. And, the issue is that most central banks, including the Fed, are basically backward-looking institutions. They don't generally have a good history of forward projecting that's accurate. And so they're usually chasing whatever's happening lately. And so right now, with official CPI as high as it is and official unemployment as low as it is, they have a clear mandate to try to, decrease inflation, even if it means mildly increasing unemployment. But of course, it's very hard to do that in moderation without causing that momentum shift because, job losses means that, people can consume less, which means businesses don't do as well, which means they hire less, which means there's more people that aren't able to consume as much. And so you get that negative feedback cycle that is hard, it's hard to say increase unemployment from 3% to 5% and stop there, right? Mm-hmm. That's historically a very challenging thing to do. And so I think right now they're clearly going from one direction to the other. But the problem is I think we're later in this cycle than they realize. And so we have declining PMI, so declining Purchasing Managers Index, which basically means economic deceleration, even though it's not necessarily outright recession yet. You have very, very low consumer sentiment. And so I think that these are going to be challenging for the next 6 to 12 months.
She believes that the Fed is indeed one of the biggest drivers of the global market. She also points out and calls Fed a backward-looking institution. Now that's a bold statement, but she explains how they have a good history of not projecting forward, but what they do is they chase up what's happening right now. I mean, we can all see that due to the high CPI report, the Fed has increased interest rates by 75 basis points. They are focused on decreasing inflation, even if it means mildly increasing unemployment. You see now, not just him, but Sam Bankman-Fried, the CEO of FTX, also thinks the same. Recently, he said, the core driver of this has been the Fed. So do you agree? Do you believe that the Fed is the core driver? Do you think recession is coming soon? Let me know your thoughts in the comments below. Be sure to subscribe to my channel for more videos like this. Also, don't forget to hit the like button and bell icon. I'll see you guys in my next video. Adios!